Greetings, everyone. This is Jack Jones with Robert & Jones Wealth Management with our April monthly market update. We hope this note finds you well, and we want to specifically thank our valued clients for the trust and confidence that they placed in us, and tell you that we look forward to seeing you both at events and in-person meetings in the very near future. We want to congratulate the Baylor Bears, who won their first NCAA men's championship. We also want to thank our great clients who participated. More than 100 had over 1,200 pounds of brisket provided by Whiskey Oak Smoke at our event on March 27th. We also were able to raise over 2,000 pounds of food for Bridging for Tomorrow. So thanks to all of our clients who made this a fantastic event. So markets in March were up. For the month of March, the S&P and Dow were up. You'll see a little bit more than the NASDAQ, but broadly markets were up. We also had on Good Friday, we had a jobs report where new jobs added were over 900,000 and the unemployment rate dropped to 6%. One side note as it relates to the unemployment rate is there's still approximately 8 million fewer people working now than pre-pandemic. Those numbers, because they're not part of the participation rate, aren't counted in this unemployment rate. So even though we further dropped from where we are, and that's good news, and obviously the jobs report was much better than expected, again, there's still approximately 8 million fewer jobs, fewer people with jobs than there were pre-pandemic. The economy is largely showing signs of growth. Just a couple of indicators that speak to that is that the Conference Board Consumer Confidence Index increased to a one-year high of just over 109. In March, this was ahead of what was expected at 96. And the gain from February's reading of 90.4 was the largest one-month gain in almost 18 years. And the manufacturing index also was up in March to 64.7 over 60.8 in February. So broadly showing signs of economic expansion. And expected growth for 2021 is between 6 and 7%. Of course, we have a lot of real estate left to go and a lot of things could happen, but that's what's projected. As this economy looks more like a traditional recovery, it looks like more of a restart from an economy that was stalled out and really stopped back in March of last year to one that's starting to show signs of being in restart mode going forward. Interest rates is something we're paying a lot of attention to. Interest rates have moved up. They're sitting at about 1.7 today. But if you look at this over a 5-year period going back to 2016, we're not in a completely different place than we were then. So we've gone up quite a bit, down quite a bit to about 50 basis points in 2020. We started the year at 1 and we're now sitting at about 1.7. And there's a lot of speculation about rates and whether they're capped here, whether they'll continue to creep up from here is something we're paying very close attention to. But just on a longer view, we're basically where we were in 2016 now at about 1.6 to 1.7. In terms of the S&P 500, there's a lot of conversation about the fact that the top 5 or the top 10 stocks have market cap that's 27% of the S&P 500, and that's true. However, just to put that number in a bit of context, the top 10%, which again is 27% roughly of the S&P 500 as of the end of March 2021, also contribute about the same amount to earnings per share. So there's not an outsized weighting compared to earnings per share in the top 10 that are reflected in the S&P 500. We also see kind of a change in sector leadership. This measures in gray 12/31/19 through November 6th of 2020, and then November 9th and forward. And what you can see is kind of some obvious names that did very poorly from December of 19 through November 6th of 20, really changing dramatically from 11/9 through present or the end of the first quarter. So you've seen things like energy, airlines, retail REITs, banks that did really poorly for most of last year from November 9th on have been the ones that have really improved. So you're seeing a bit of a rotation there. There's starting to be some signs of inflation. You see average gas prices at 2.80. That was a little over 2 just 12 months ago. So that's one indication of inflation. However, the official readings as we look at inflation are still in the sub 2 range in terms of headline CPI. Again, that's something to keep a very close eye on, whether inflation is transitory or temporary, or it's something that's a longer term threat. So our economic outlook for 2021, again, growth estimates are between 6 and 7%. One thing to watch out as a risk factor, our taxes are likely to go up. And there's this discussion about the lag time between taxes going up and stimulus or spending. Keep in mind, when taxes go up, they affect the markets and economy immediately versus any stimulus has a longer term impact. So even if you argued for a 1-for-1, tax increases are negative, but stimulus is positive on a 1-to-1 basis, there's a timing lag there. So look for, at least in the short run, the impact on any tax increases to be more negative than the stimulus. Now, whether that plays out differently over a long period of time remains to be seen. One thing to think about positively as it relates to 2021 and beyond is because of savings rates. There's a record amount of cash. We've spoke to this statistic before, over $4 trillion sitting in money market accounts that are basically earning nothing. The likelihood is that money is either pent up spending that will be spent on travel, homes, cars, et cetera, or potentially move up in terms of risk spectrum into bonds, stocks, et cetera. So the fact that we're sitting on that much cash as of the end of January is a really significant item. And if that cash in part is used either for investment or for spend purposes, is very positive for the broader economy. So with that, I'll close. I want to thank everyone for listening in. Again, thank you to our valued clients. It's our honor and privilege to serve you. Please reach out to us if you have any questions about anything discussed here today. We hope you found this interesting and informative. We try to keep it short. We wish you all the very best. Stay safe and take care.